All right, China, as I said, that is the big one. And obviously, we're a long way from getting any commitment on the part of the Chinese to so much as blink, let alone score a deal here. But the effect is obvious. I had a chance to talk over the weekend with the White House policy director on all this, Peter Navarro, dismissing fears that the battle with China alone is going to lead to higher prices. Take a look. But are you worried, though, that this holiday season, American consumers could look at higher prices? Maybe they absorb that and they're perfectly happy to. Consumer confidence is at decades-long highs, so maybe you get through it. But are you worried about it?
So here's the lesson, Neil, of low prices, which are the creation of unfair trade practices, dumping by countries like China. Low prices have a high cost. It's lost factories, it's lost jobs, it's lost intellectual property and technology, and we cannot afford to lose any more of that. I think the stock market is accurately reflecting the fact that the tough trade actions that the president is taking has a very, very modest and negligible macroeconomic effect.
All right. So for now, it thinks it will be minimal. It could be there, but it will not be a big economic issue one way or the other. That is, getting really tough with the Chinese. Really, the lone country, lone region, if you will, standing apart from trade deals scored or at least proposed in virtually every other country on every other continent. To Fox Business's Susan Lee, Moody's Capital Markets Chief Economist John Lonski. Is he right that we can deal with this holiday season? It isn't going to be crazy prices going through the roof?
I'm not very worried about it, but in the event that companies, retailers feel forced to go ahead and hike prices because of these tariffs, I think it means a lower sales than otherwise. So let's not forget that of late we've seen home sales drop and motor vehicle sales drop in part because of higher prices. Consumers are showing resistance to higher prices, and I think that that's going to continue.
You know, one of the things I suggested, not that the administration takes notes from me, clearly they don't, but that you ought to brace the American people for this, because I can't tell you the number of people, and maybe you've seen it in your reporting too, who think that the governments pay these tariffs.
Right.
They do.
Consumers do.
And I don't know if they've been properly prepped for that this holiday season.
I don't think they've actually felt it yet, to be honest. It's Consumer confidence is at 18-year highs. If you looked at the numbers from Target,
right,
from Kohl's, I mean, the numbers go on and on.
Although I did notice Walmart put out a warning.
That's right. They said that prices would go up maybe 5%, not 10 to 10% tariffs. You're going to say, John?
Well, I was going to say, let's not forget again, the moving 3-month average. Auto sales peaked in November 2017.
You're coming off a 17 million auto sales clip, which is a record clip.
Once they decided to cut back on the sales incentive programs in Detroit, that adversely affected sales. Home sales, I think, they've been moving lower, higher mortgage yields, as well as prices that are simply
unaffordable. But that's because
unaffordable.
the right inventory isn't in the market, and prices have been going up.
There's plenty of new homes for sale, okay? And those
that represents 10% of the market. 90% of the market's existing home sales.
I think there's going to be when the Fed talks about the containment of inflation expectations, what the Fed is talking about is the consumer is looking for price growth no greater than roughly 2%. And when the American consumer sees prices growing by significantly more than 2%, you know what the consumer does? They don't buy. They go ahead and they.
We haven't seen that.
I think you've seen it with autos. They're waiting for their.
I've seen an incredible earnings quarter from the likes of Target, from Kohl's, Walmart. In fact, Target's CEO says this is the best foot traffic he's seen in 13 years.
That's because prices are still contained. They're not taking off. But in the event that they take off in the holiday season.
By the way, kudos to both of you, because some, you might be surprised, find my discussions on these matters rather cerebral and dull. And so you approve and they are anything but on these economic matters.
I think.
But Susan, one of the things that has come up, and I'm interested to get your point as well, is that everything has to go together just right. And that I think it was some Chinese official over the weekend telling the Financial Times, forget about us being isolated. We spent centuries growing as a power being isolated. So I think what they were saying,
I don't think that's necessarily true either.
We're used to the isolation thing.
Right. I think they've built their empire on trade as well, whether it's silk, whether it's tea, whether it's gunpowder.
So I don't think, come to the table.
I think they recognize the history of trade and how lucrative that is for an economy.
They can trade with other countries.
Well, they could. That is true. But this is the largest country in the world, the largest market in the world. This is where they sell $500 billion worth of goods every year. I think they recognize where they need to go.
What if this drags on a while? This is the one holdout, but it's a big one. You know, if China is just a holdout for a while.
It hurts China more than the United States. Let's not forget, for the year to date, the Shanghai Composite is down like 14 or 15%. Right. U.S. equities are up 9 to 10%. Big difference. China's seen some of the slowest manufacturing growth they've seen in years. They're hurting because exports aren't growing rapidly enough. And at the same time, because of tighter credit conditions, domestic spending's not doing all that well.
But you know what's interesting? As soon as an agreement is made, even a verbal one with Japan, even a verbal one and a commitment, a promise with South Korea, their markets do turn around.
The South Korean markets? Yeah, they do, because they think that this overhang has been cleared. Same thing with Canada. Look at the loonie, 4-month highs after we have a framework agreement that hasn't even passed just yet. But I think that's kind of the overhang right now.
What did Canada get out of this deal?
I thought that while they got the dispute panels in place, so there's a way to still argue and arbitrate in this deal. They have autos are still, and you know, they have access to the largest market in the world, right? Also protection on their autos, so they won't be tariffed at all, regardless.
If they adhere.
If they adhere, but even they think there's a sideline agreement between the two.
You know what's weird, and I want to get your thoughts on this. It's more like a psychological one, but the fact that. The president, remember the stories? He wasn't talking to Trudeau when he was last week in New York, right? He skipped an opportunity to speak to him. The Canadians say that didn't happen, but Trudeau was locked into a corner. He's going to have an uphill re-election battle.
That's right. I think it's a win for him because of that.
But did he cave? Is it your sense he caved, or that the president got the better of him? Because the pattern with this president is he rips the leaders of these countries beforehand, then gets a deal and says, oh, he's a lovely guy and he runs a great country and we love the Canadians.
Well, you know, he may have won because things could have been worse. And who knows, he may benefit from this fact. They have now in North America a minimum wage in effect for auto workers, and that's going to be a greater benefit to Canada.
A minimum wage average, right?
Yeah,
$16 an hour.
And costly to
Mexico.
Yeah,
that's right.
Yeah. Right. Yeah. So who knows? It's a strange trade agreement in that it was as if it was designed by a Democratic president, because of the fact that you have more regulation of the auto industry and you have this hiking of wages in the auto industry.
But even drug companies were beneficiaries, right? Because they're going to be able to get traction in Canada and everything else.
Protection of IP, financial services, digital services, and pharmaceutical companies. So I don't really think it was that Democratic. I thought it was very Republican in that there's a protection of industry and protection of the economy.
I don't think he would have an easier time getting Democratic votes for what is worker union-friendly constituents, right? That might be more of a battle?
I think in the end, if you look at the details, I would say that the labor unions should be happy with this, and the workers of America, manufacturing
so there's
jobs.
A higher probability that a Democrat congressman is going to vote in favor of this package than a Republican.
But politics just might play into it.
The good thing for the Republicans today is that the share prices of Ford and General Motors are significantly higher, despite
it's the flip, in other words, what President Clinton had with NAFTA, where he had more Republican than Democratic support, or Barack Obama with TPP, more Republican than Democratic support. Maybe the opposite.
Yeah.